Mentioned the rand has shown significant weakness this morning. Perhaps it's dollar strength that we've been seeing. Why are we seeing so much pressure coming through on the local currency? Of course, we know that the US employment is very much under the spotlight today.
Yes, it is a story of the dollar gaining favor in relation to the euro. Dollar bulls are bracing themselves for really positive data out of the labor market later today, and the dollar is also benefiting from its safe haven attributes in light of the escalating geopolitical tensions in Egypt, which is in its 11th day at the moment. I think the momentum is in favor of rand bears at this stage, given that the 200-day and the 55-week average has been breached to the top side. And if the current rand bearishness continues, we could see a move towards 757, if not 776, plausible over the coming days.
Shireen, we've got Gerard Lampen with us in studio. He was alluding to the fact that the rand could see some strength after this bout of weakness. Do you agree with this? Do you think we could see currency strength going forward?
Yes, indeed, we could see currency strength going forward, but I think the main indicators at this stage is the labour market data out this week. And as I mentioned before, dollar bulls are bracing themselves for positive data coming out, and we could see further dollar strength coming in towards the end of the day.
Shireen, let's touch on those US employment figures. Unemployment in the US sitting at 9.4%. Non-farm payrolls in December really disappointed the market in comparison to what we saw on the private sector front. Also interesting to note that the private sector numbers, the ADP figure for December was revised downwardly quite sharply as well. What are you expecting in today's session? Clearly, Fed Chairman Ben Bernanke's statements yesterday talking about unemployment still being an issue might just signal to the market that we might not get such a great number today.
I do think that the numbers should come in a little bit more positive than what we have seen. Even though that some of the numbers have been revised, we expect payrolls data to come in a little bit higher than it had been. Although the unemployment data is expected to show an increase in the unemployment rate to about 9.5%. Bernanke has indicated that the labour market has been showing encouraging signs of improvement and towards sustainability of the US market. So I think the data towards the end of the day is likely to be relatively positive.
Let's touch on the inflation outlook coming through from the ECB and the Fed as well. ECB citing inflation being an issue, but not too much so that it warrants an interest rate hike. On the other end, we had Fed Chairman Ben Bernanke saying that inflation has not seeped through whatsoever at this point in time. What does that mean for South Africa, given the fact that we are starting to see price pressures on the commodity front coming through?
Our inflation expectations at this stage is well anchored. We do see inflation to remain within the 3 to 6% target range, and for that reason we don't expect the Reserve Bank to change interest rates at this stage. As far as the ECB is concerned, inflation is expected to breach the bank's 2% limit, but at this stage they feel that inflation expectations is well anchored and that inflation overall is well contained. So they do not see any major price pressures coming through. However, if oil continues on its upward trajectory, we could see some pressure coming from petrol prices, and food inflation over the past couple of months have also started to increase. So there could be significant pressure from that towards the middle of this year.
Shireen, let's touch on the SACCI Business confidence number that was released. We saw a slightly softer number for the month of January, but when you compare the year-on-year number, we are in good stead at this point in time. Of course, labour issues also seem to be on the agenda of many an investor.
Yes, you're quite right. The labour issues are concerned. We are expected to see the unemployment data coming out next week, the unemployment number for the final quarter of last year. Although the SACCI Business Confidence Index showed a mild dip in last month to about 87.4 points, we don't see that this is much of a concern. We do see that businesses are adjusting the way they do business given the current situations, and we do expect that number to be a bit of an aberration, and going forward business confidence is likely to continue improving.